Erik, we are looking towards a recovery in 2014 now, but it looks a bit weaker than we thought in May. So what's happened in the last 6 months?
Well, first of all, the eurozone continues to be weak, but the main difference compared to 6 months ago is that Russia is not growing as fast as we thought at that point.
And if you look at the Russian economy, that has an impact right across the countries where we invest. And what can be done to stimulate growth again in Russia?
So Russia has two kinds of problems. One is cyclical, and that has to do with its dependence on commodity prices, and commodity prices have come down quite a bit. The second problem is structural, in the sense that it has still a climate of investment that is not what it should be, and we are seeing that in terms of capital outflows from Russia. What needs to be done there is a whole range of reforms that creates more transparency around business activities, that opens up more to competition in various sectors. So it's a whole host of measures that can help Russia improve its investment climate.
And you say the eurozone is still there in the background, but what's happening? Are Western banks still taking money out of the EBRD region? What's the role of the eurozone in the prosperity of Eastern Europe?
Well, the eurozone is still very important. It's true that some of the Central European countries have managed to diversify their exports, but still they depend a lot on what happens in the eurozone. They also depend on the eurozone because of the eurozone banks, the banks that are so important throughout Central and Eastern Europe. These banks are continuing to deleverage, to take funds out of the region, and that will continue for a few more years, and that is something that will still impact the availability of credit in the region.
So what do you need to do to get banks lending again?
Well, I think first of all we need to create a stable framework around cross-border banking in Europe. That's the number one measure that can help the banks create the stability around the rules of the game. There's been so many changes. There's still a lot of uncertainty about what will the banking union imply and so on. And that could we resolve that uncertainty, that would help a lot to stabilize credit in the region.
Next week you'll be publishing your transition report 2013. It's called Stuck in Transition. What does that mean?
So Stuck in Transition is really an observation that over the last decade very little has happened in terms of economic reforms in our region. The countries have leveled off in terms of reforms, some at a high level, so Central Europe has done very well, but is also now, from our point of view, stuck in transition. Other parts of our region are also stuck, but at lower levels of reforms, and there's only one exception really, which is Southeast Europe, where you see continued reform, of course driven very much by the prospects of accession to the European Union.
And so the report is about how to stimulate reforms again and get the reform process back on track.
Yes, the report looks at the interaction between political and economic reforms, and we have seen that there is still possibilities, even though your political institutions are not that strong, that countries can make headway. So we're trying in the report to show some things that can be done to try to push economic reforms even when political institutions are weak. And on the other hand, we also show that economic reforms can, in the long term, benefit political reform. So it is that interaction that we are looking at in the transition report for this year.